In today's brand new episode, we are going to have ourselves a little bit of fun because I'm going to break down and translate complex money language into simple, everyday language that we all use for you. Hello to everyone watching the Money Monster channel. Whether you're someone who woke up early to watch, watching from the left side while driving, watching in the shower, while eating, or before bed, thank you so much. If you'd like to support my Money Monster channel, just scan the QR code below. You can scan this QR code right here to support and encourage the Money Monster channel. Or if that's not convenient for you, no worries. Just hitting like, sharing, or subscribing already makes me feel incredibly happy and grateful. All the income I receive will go toward encouraging the Money Monster team to keep making high quality and engaging videos. And it also motivates me to keep writing fun content for you all. To be completely honest with you, being this straightforward and real is absolutely essential because it allows me to access more information and share even deeper truths and insights with you. It even lets me buy footage or AI apps to make this channel significantly more entertaining and higher quality. For all my friends out there, please hit that subscribe button for me. So today, what we're going to talk about is translating money language into people language. Honestly, those who are super rich, like really wealthy, don't really want regular folks to understand finance that well. Because if everyday people know too much about money, it means the rich lose their human labor, lose their worker bees, and lose their power to control. Most people, right? So that's why financial matters end up becoming knowledge or topics that, when discussed, seem complicated. The terminology is often in English, or even if it's translated into Thai, it's still in a language that's hard to understand. And not only are the words themselves confusing, but when they're put together in context, the context itself is also difficult. Basically, it's like this. True authentication, or putting on 2, 3, even 4 layers of locks, that's what it is. But if I, Sai, break it down and explain it to you, everyone will go, oh, I get it, and you'll instantly see the picture. So today, I can only cover a few terms, but still. Let's get started. Let's start with the word sanction. Lately, we've been hearing it a lot, like when the United States issues sanctions against Russia and tells its allies to join in sanctioning Russian oil. So what does sanction mean? In Thai, it translates to boycott. Wait, the countries imposing the boycott don't have monks, and they're not Buddhist countries, so why do they use the word? They're not Buddhist countries, so why? Boycott? I really have to hand it to the person who translated the original term. Which, I'm not trying to disrespect anyone, but the original translation just doesn't paint a clear picture. So I wanted to try translating it in a way that's more vivid and entertaining. For example, let's translate the word sanction as cutting ties. If we use this word, everyone will understand easily and really get the picture. All right, let's get into the news. Ever since Russia attacked Ukraine, the United States has issued orders to cut ties with Russian companies. They also told their allies to join in and cut ties with Russian companies as well, starting with ordering everyone to stop doing business with Russian oil companies. In history, the United States has cut ties with Russian companies more than ever before. It's a record. Specifically, they've ordered individual sanctions, or cutting ties on an individual basis, for as many as 1,006 people. There have been 37 orders to cut ties at the company level, totaling as many as 9,286 cases. And at the institutional level, there have been as many as 3,249 orders. With so many sanctions like this, we have to keep an eye on whether Russia's economy, when isolated to this extent, will be able to withstand it or not. Let's see. Can you picture it? After the United States imposed sanctions on Russia, right? Basically, sanctions mean cutting ties. Not long after that, well, actually, it was a while, maybe a year or two later, Russia's economy was totally fine. Nothing happened. So the US decided to add a new measure, the so-called secondary sanctions. Wow, sanctions were already confusing enough, and now there's secondary sanctions? How should I even translate that into Thai so it makes sense? Yeah, If we translate it literally into Thai, secondary sanction would be secondary boycott. That just makes it even more confusing. Let's try using the term secondary boycott in a news context. The United States has imposed a secondary boycott on Chinese banks because they're suspected of helping Russia with transactions and trading with Russia. That amount of money basically means China is supporting Russia in attacking Ukraine. Yeah, I get it. But it's still not quite hitting home. How about this? Let's translate secondary sanction the way Money Monster would. Secondary sanction means I'm cutting you off too. Let's try putting that in the news. The United States has issued a cutting you off too order against Chinese banks because they're being targeted as the top place for transactions and trade with Russia, which basically means they're financially supporting the Russian military in attacking Ukraine. You see, even though Chinese banks aren't actually fighting on the ground in Ukraine, they are still being hit hard with these secondary sanctions. It's almost like even though China itself isn't the one attacking Ukraine, they are still being strictly ordered to cut you off too. Yeah. Money Monster, right? Next worry? Government bonds. Every time the professor talks about government bonds, I always add that they're basically tools the government uses to borrow money, right? We hear about them in the news all the time. Let's talk about some news stories, shall we? Like Janet Yellen, the US Secretary of the Treasury, issuing another $400 billion in government bonds to cover the government's budget deficit. So how can we make this easier to understand? And then we don't have to keep explaining what government bonds are. Let's try translating it. If the term government bonds means IOUs or debt note, let's try putting that into the news story. Janet Yellen, the US Secretary of the Treasury, issues an additional $400 billion in IOUs to cover the government's budget deficit. No need for further explanation. Everyone immediately understands that issuing IOUs means borrowing more money, which is what government bonds are. Confusing, right? Like when China issues government bonds, it means China is issuing IOUs. When Thailand issues government bonds, it means Thailand wants to borrow more money, so they issue IOUs. That's it. Everyone gets it. Okay, moving on to the next word, as I mentioned earlier. Government bonds, right? They're basically borrowing money to cover a budget deficit. And the term budget deficit, we haven't covered that yet, right? We still need to explain it. So should we try translating the term budget deficit in the Money Monster style? Hold on, let me give you an example sentence first to show how the term budget deficit is usually used. For example, the French government had its credit rating downgraded from AA to AA- because the government's budget deficit reached 6.6% of GDP. That's a sentence that got it. It's not easy to get. The level of understanding is actually pretty high. It's quite tough to grasp. So let's try translating it. Suppose we say pursuing a deficit budget policy. It means spending more than you earn. Let's go back to the original news story. The French government had its credit rating downgraded from AA to AA- because the government was running a deficit policy, spending more than it earns, at a negative 6.6% of GDP. Hey, got it? Or should we connect this to the previous news where Janet Yellen, the US Secretary of the Treasury, issued $400 billion in government bonds to cover the budget deficit? Let's use the translation from Money Monster. Janet Yellen, the US Secretary of the Treasury, issued $400 billion in government bonds to cover the US government's deficit spending policies. See ya? And now you finally get the full Money Monster picture. All right, since we're having fun, let's keep going. The word inflation. Let's try translating it this way. Inflation means money losing its value. That's because the government wants inflation to rise by 2% or 3% every year to encourage people to spend money. If you don't spend your money today, prices will go up in the future, so it's better to use your money now. And this gradually makes people poorer, so that people stay in a mode where they're constantly hustling, working like ants, always having to work. You're not allowed to just sit still or be comfortable. If you save your money as cash, it will just keep losing value more and more, and your money will keep decreasing, even though the government says it's only 2 or 3% a year. But honestly, that's not true at all. Inflation isn't just 2 or 3% a year, because besides prices going up, which causes inflation, the government also keeps printing more money. And lending by banks is also one of the primary mechanisms that increases inflation. Now, if you hear the word inflation and think to yourself, hey, I don't really quite get what that means, try replacing the word inflation with the phrase devaluation of money. That's exactly how I interpret it. It makes a lot more sense when you look at it that way. The government has a policy to intentionally devalue people's money by 2 to 3% each year in order to stimulate spending, kind of like jump-starting the economy. And the more the central bank prints money, the more money there is in the system, the more our money loses its value. Lending by banks is also one of the mechanisms that causes our money to lose value. Get it? Inflation means money loses its value. But nowadays, when people talk about the problem of inflation, why is it a problem if the government actually wants money to lose value? And if making money lose value makes people poorer, and that's supposed to be good, then why is inflation a problem at all? Why not just let inflation run wild and make everyone poor? Wouldn't that be great? Why not let that happen? Honestly, the United States doesn't really care that much about major inflation problems. Even Yellen herself has come out and said so. See, it's not really part of what's causing economic problems. And if they had to choose between getting the US to hit the 2% inflation target or continuing to borrow money, they choose to keep borrowing without worrying about lowering interest rates or making sure inflation hits the target. But the reason why high inflation becomes a problem is because it leads to the next term, which is consumer demand. Decrease. If the government causes inflation to get too high and makes people too poor, this situation will happen. Domestic consumer demand will drop. Wow, that's a long term and not used very often, but I'll explain it for you. It's actually really simple. If the government causes inflation, which means making money lose its value too much, to the point where people become a lot poorer, it will cause consumer demand to decrease. This term means that it means consumers are broke. They have nothing left to spend. So if inflation is kept mild or people get just a little bit poorer, it can actually encourage them to want to spend money, right? But if inflation gets too high and people become much poorer, then consumers end up broke and there's no money circulating in the economy. That makes the economy worse. That's why they try to keep inflation at a sweet spot. Just enough to hurt a little, but not so much that people become a lot poorer. Everyone, let's do a quick vocab roundup, translating money terms into everyday language, Money Monster style. Starting with the word sanction, which means cutting ties. Secondary sanction means cutting ties with you too. Government bonds are basically IOU tickets. And running a deficit policy means living paycheck to paycheck. Inflation basically means that the purchasing power of your hard-earned money is steadily losing its value. And declining domestic consumption means that everyday people are finding themselves completely broke and simply cannot afford to buy the things they need anymore.